Hello everyone. Today we're going to learn about support and resistance in Forex. It's one of the most important things that you can know in Forex. And once again, my name is The Beach Trader and I'm living a freedom lifestyle, and I want to teach you guys how to really trade. And you guys go ahead and like and subscribe to this channel. And so we're going to understand support and resistance. Number one, we're going to learn about support. Number two, resistance. Number three, plotting. Number four, we're going to talk about trading the bounce. And number five, we're going to talk about trading the break. And then number six, we're going to talk about pivot points and how important that is. And then number seven, we're going to talk about trend lines that put everything together. And that's really how you should be trading. So number one, support. Support levels indicate where there will be a surplus of buyers. Support levels tend to stop price from falling below a specific point. So support equals the floor. So every time you hear support, you think of the floor because that's the bottom. And let's look at a support. Right here, we marked up the support. If you see the blue right here, this is the support line. And we're saying it's not going to go underneath that. Now you see how the candle might dip a little bit underneath that, but you won't see the big part of the candle dip underneath that. It's always going to go a little bit underneath, but it's going to shoot back up right when it gets to that point. And here we go again. Do you see how right there over and over again it's going to hit this point right here on this line, and then it's going to continue to shoot back up, right? That's what we're looking for. We're looking for where is it going to hit most of the time and shoot back up. And you see the line, it's hitting about 3 to 4 different places. Now a support needs to at least have 2 to 3 times where it hits that point to where it goes the other direction, or it's not a support. Remember that. Let's talk about resistance. So number two, resistance. Resistance levels indicate where there will be a surplus of sellers. Resistance occurs where an uptrend is expected to pause temporarily due to a concentration of supply. When the price moves up and then pulls back, the highest point reached before it pulled back is now the resistance. So look at the resistance, that equals the roof. That's the top, When it hits the roof, it's gonna what? Go back down. So resistance, roof. And here are some resistance zones. If you look right here, the resistance zones are in red, and you see where it hit the top of that and it shot back down each time, and then it broke through in the middle, but then it hit another resistance at the top, and what happened? It busted back down, and then guess what? It went back to the support that was there before, and it stayed at that support level. So it's very crucial to mark different resistance zones, because when it breaks out, sometimes it bounces like you see right here on the left, but in the middle, it broke through there and then it bounced back up at the top. So you have to understand the bounce and the breaks. And here we go again, resistance. We drew a resistance line. This is where the top of the wick of the candle hit each time. And then guess what? 4 times when it hit that, it went back down. So we know that we could trade right there. Right when it gets to almost to that resistance, we want to put in a trade. Because why? Because we know it's going to go back down, right? That's called trading the bounce. Let's go over plotting. Number 3, plotting. You will find in most situations, it only takes that one well-marked level to clearly map out and help you clearly read the situation on a price chart. So you don't have to make so many marks. Sometimes you just need to make one mark, one line, right? Seriously, anything over 3 lines marked on the chart will start to be considered too busy and needs some cleaning up. So we never want to mark more than about 3 lines on any chart that we're going through, because then it's like, where is the support? Where's the resistance? You kind of start getting confused, and you need to color code it at that point. And then by only marking out the important levels to watch, you will keep your charts tidy, simply, and easy to read. This gives clarity back to the chart and to the trader, allowing the identification of good trade setups and making the anticipation of future price movements much easier. Keep it clean, it becomes way easier. And let's look at this. We only have 2 lines that we have right here. So we have the resistance. We see the resistance is a straight line, and the support, it's kind of a upward trend line. And you see that when you have this line, it touches there and it shoots back up. So the resistance and support aren't always just a line from one side to the other. Sometimes it's in a diagonal, sometimes it's horizontal, okay? We have to remember that. Let's look at another situation. So here we go. We have a couple lines on here. And if you look at the middle line right here, or the second to top line, that's a good one. Good resistance right there. Every time it hit right there, it went back down. It broke through a couple times. But then what happened? Even when it broke through, it went back down. And then we look at all the way at not the bottom line, but the one right above the bottom line. And you have it right there hitting again, hitting and coming back up. Sometimes it goes a little past that line. So we do a double line right there in that instance, because that's where we're going to start the trade at, in the middle of that double line somewhere. We know where it's at, okay? So let's not do too many lines. Let's keep it very clean and simple. So let's talk about trading the bounce, because what's good about knowing the resistance and support unless you know how to trade? So trading the bounce is probably the #1 way to trade on these resistance and support lines. So this is when you buy when the price falls towards support. And then you sell when the price rises towards resistance. And then remember, the more often price tests a level of resistance or support without breaking it, the stronger the area of resistance or support really is. So let's look at this. So we're talking about the bounce. We're looking at the right. So bounce within price ranges. So every time it hits the resistance at the top, we sell. Every time it hits the support at the bottom, we buy. Do you see the green and the red on the right side? This is what we're talking about right here. This is bounces within price ranges. So we're buying the bounce. Let's look how this looks. So this is right here. If we draw the line of the resistance, we would buy. Every time it hits this line, we're buying for it to what? Shoot down. So we're really actually selling on the trade, or put. We would sell each time it would hit this line, because what do we know is going to happen? It's in a downward trend, and we know it's going to go down. Okay? So let's talk about trading the break. Now this is very difficult to do, but it works really good. But this is for somebody who's very, very patient. Why? Because you have to be patient doing this or you'll lose a lot. Buy when the price breaks up through resistance. Sell when the price breaks down through support. Now this is what it looks like over here on the left. So you have a pending order to buy. Anytime it breaks through the resistance at the top, now you're going to buy, because you know it's going to move up. Once it breaks that point, it's going to keep on moving up and up. Now, what can happen is it could do a fake one where it basically goes above the resistance, but then it comes back down. So it just broke a little bit higher than it did before. So then you would actually lose on this, but this is a way that you could trade, but be very careful. So if it goes down and it breaks through the support, then you're to buy. That would be, you're buying the breaks. Okay, very difficult to do, but once you become advanced, you'll be able to understand when it's going to break through, because it'll start moving through these zones really fast. And then here's how it is. We waited. We didn't buy the bounce. We didn't buy the bounce. We didn't buy the bounce at the bottom. 3 times we could have did the bounce rule, but guess what? We waited for the buy. We seen that it was a green candle. It was kept on moving up, so we bought. And what's going to happen is it's going to go into a new resistance zone, and you're going to make a lot of money by buying this way. Okay? But it's not for everyone, because you see how it barely broke through, but then it went back down. So you have to be extremely careful when you're buying the breaks. Pivot points. Let's talk about pivot points here. So the simplest way to use pivot points levels in your Forex trading is to use them just important resistance level. The price will test the levels repeatedly. The more times a currency pair touches a pivot level, then reverses, the stronger the level really is. And let's look what this means right here. So this is live charts right here. You guys can all get this. And we're looking at the pivot point calculator. You're going to click on pivot point calculator, and it's right here. You'll click on this link right here. It'll send you here. So I entered the symbol USD and I hit get data. And this is for today. It shows the open, the high, the low, and the close. right? And then it shows you when it pivoted right here, 1999.18. So we know when it goes right there, it's going to change directions. Now we know the resistance is, we have 3 different resistance here, and we have 3 different supports. Okay, and then if you understand the other indicators, you can use these. But what we're basically focusing on is right here, these resistance and supports and the pivots, because by using this, we already know they did the calculations for us. It's a math equation, and we'll be able to win if we go with these resistance and this support. Very simple when you're pivot point trading, but you guys have to have a good calculator. And the one that I would advise you guys to get is live charts. Really good one. And then trend lines. Let's put this all together with trend lines, and I want to take you guys to a chart to break down everything for you. As the name implies, trend lines are levels using technical analysts that can be drawn along a trend to represent either support or resistance, depending on the direction of the trend. Think of them as the diagonal equivalent or horizontal support and resistance. These trend lines can help us to identify potential areas of increased supply and demand, which can cause the market to move down or up respectively. So the easiest way to trade Forex is to get on a trend line, either going up or down. Why? Because we know that it's going to continue to go up. So even if it starts going down and you bought it, then you know pretty soon it's going to go up. Why? Because it's in an uptrend. And if we buy for it to go down and it starts going up, if we sell it and it starts going up, we're not worried because we already know the trend is what? Going down. So those are the easiest ways to trade, not when it's consolidating. Consolidating means that it's not going up or down, it's staying in the middle somewhere. Okay, so we want to trade on trend lines. This is a trend line right here. Now, let's see. Is this a trend line of what? Support. It's a support one. So every time it hits the floor, it shoots back up. So that's why we have this diagonal line. Every time it hits the support, it shoots back up. So all we really have to do is know when it's going to hit this line, and then we make money when it goes back up. And then we have a resistance trend line right here. That means it is going down. So every time it hits the roof, then it goes down. Do you see that? Every time it hits the roof, it goes down. So we can make money by saying, hey, we know that it's going down in a downward trend. We get it when it's up. Right when it starts moving up and hits this line, then we get it to go down, and you can make a whole lot of money trading on trend lines. It's probably the easiest way, the simplest way to trade. You just have to know how to draw these lines on the chart. So resistance and support, this is what we've been talking about. Now let me show you guys something live right here. I want to show you guys a chart. And this is a chart. This is called dailyfx.com charts. And we're looking at the euro versus the dollar. So now right here, what are we looking at? This is a upward trend. Do you see how it's going up? Now right here, between this time right here, this is called consolidation. It's going up, down, up, down, up, down. There's no real trend, but you can see a trend right here. Now let's look at this with the line. We're going to draw a line through it, and we'll start. Let's just start right here. So if we look at a line, there we go. And what do we use? We use red, right? So this is a red one, and let's make it be 4. So here goes a line right here. And every time it hits the top, it's gonna what? It's gonna fall back down. So that's the trend line for this one right here. Now let's look and see if we can find another trend. Maybe we'll have a couple of minutes or something. We'll change it to minutes, and we're looking for a downward trend, which hasn't happened in a while. But here we go, downward trend on 30 minutes. Okay, so we see right here, and it's going down. So let's make a line right here. And once again, every time it hits, what does it do? It just broke through. So every time it hits this line right here that we're making, what's going to happen? It's going to shoot back down. So this is what we're looking for. Now let's look at right here. Let's just say we want to trade, and we're going to do a green line right here. And so every time it goes right here, green line, because we need to know what's going to happen. It's going to shoot back up. Do you see that? Do you see how it hits this line and goes back up, right? And then right here, it breaks through. So we're talking about trading the bounce right here. You can trade this bounce every time. Bounce, 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 bounce. Right here, you could be in a trade for a long time because it keeps on going down. So you could have caught it anywhere around here and you would have been good. Let's look at another one. Let's create another line. Let's go right here. This is where it consolidates at. But could we have won right here? Yes, we could have won. Why? Because every time it hits here, it bounces back up. We're talking about doing 1 to 3 minute trades. And this is, look how many pips this is. This is 0.63, and it goes up. And the top here, every time it's hitting the, so it's going up 165. So if you know high frequency trading, that's a big difference. If you caught it right here in a 1 to 3 minute trade, you're going to win each time. You could have won about 12 trades right here. Right? If you're trading right here, doesn't matter what time you picked, you're going to win. You got it to put, and these are 30-minute increments. So you won about 6 times. If you kept on hitting put, it kept on going down 6 times. 6 trades, you would have won right here. One after another if you're doing 5-minute trades. If you're doing 1-minute trades, you could have probably hit about 15 to 20 of them. Really quick right here. So this is what we're talking about. That's how you chart the map for the resistance. Very, very simple concept. You either going to trade the bounce like this. Bounce when it hits, you trading it for go back up, right? And then you can also make a line right here. Look at this. You could also make another line at the top. And you could say every time what? Every time it goes here, and we're going to change this to red. Red's always at the top, right? Resistance. So right here, every time it hits this red, what happened? It went back down. Every time it hit the green, it went back down. So this is what we call a pivot right here. We know that we can hit it when it goes down. This is the low. We know that we can hit it when this goes this high, and it keeps on doing it over and over again, and you're winning, and then it breaks through, and then you'll find it again right here, right here. So you can map out as much as you want and find the resistance, find the levels. I could tell you right here, this is a good resistance level right here. If we draw a line all the way through right here, this is where this one's going to probably end up, because you've seen how many times it hit right here. So we know that when it hits right here, we can just keep on watching it. Once it hits right here, it'll probably bounce back down. Why? Because it hit 1, 2, 3, 4, 5 times. It hit this area and went back down. So that's a good place to call a resistance. Okay. So thank you guys so much. Once again, my name is a Beast Trader. This is what I do. I just want to help you guys. Go ahead and subscribe and like the video. You guys, thank you so much for paying attention to this. And please learn to trade, because when you're a trader, you can make money anytime you want to, on your phone, on your laptop, even like me on the beach. Have a great day.